So I think long-term Tesla is an incredible investment. On the short-term, Tesla has these headwinds with higher rates, retooling the factory. So I think if your goal is 1 to 2 months, I don't know about Tesla, but I think if your goal is over the next 3 to 5 years, Tesla is as good of an investment as ever, and it's just a high-valued stock.
While data shows individual investors dusting themselves off and moving back into the stock market this year, alas, their love for Wall Street is uneven. That's according to Vanda Research, which points out that while retail investor inflows into U.S. stocks are at levels last seen in 2020-2021, the move has been dominated by Tesla Inc., whose shares saw their worst ever performance in 2022, and stocks exposed to a hot new technology.
I'm not a big fan of unions for many reasons. If you work at Tesla, you might get paid less in dollars, but you get stock options. And when the company performs and goes up 1,500% in 4 or 5 years, those employees did extremely well at Tesla. It's pay for performance. Now, if you're got the same pay at Ford, the problem is Ford stock hasn't gone anywhere ever. So, Ford union members aren't saying give us stock. They're saying give us cash, and that's the difference between a really exciting growth company and an old industrial company that's on the throes of, sort of the end of its existence.
Tesla shares are experiencing an unprecedented surge in demand, and to a lesser extent, so are artificial intelligence-related stocks like NVIDIA and AI, as well as the rest of FANG Group, said Marco Leccini, Senior Vice President, Giacomo Perantoni, Head of Data, and Lucas Mantle, Data Science Analyst, in a note early this year. Even the worst year ever for Tesla shares hasn't shaken individual investors' faith in the electric vehicle maker and its billionaire chief executive officer, Elon Musk. Such retail traders have continued piling into the shares, data from Vanda Research show. They've been strong buyers every day in the last month of last year, driving their net purchases to record highs in both December and the fourth quarter. At the time, they appeared poised to get a small reward for their loyalty. Tesla shares closed 3.3% higher at $112.71 in New York, halting a 7-day losing streak that had driven them down 70% that year and erased almost $720 billion from the company's stock market capitalization. The drubbing has been fueled by rising interest rates that battered growth stocks, worries that demand will erode if there's a recession, and concerns that Musk's acquisition of Twitter will divert his attention and increase his sales of Tesla stock to keep the social media company afloat. The drop had, at one point, made it the third worst performer in the S&P 500 index this year. Musk told employees that they should not be bothered by stock market craziness, Reuters reported as it cited an internal email. For Tesla's diehard fans among retail investors, the risks to electric vehicle demand or Musk's preoccupation with Twitter haven't been enough to sour them on a stock that became one of Wall Street's highest flyers during the pandemic. Retail investors have bought more Tesla stock over the last 6 months than they have done overall in the 60 months before this, Vanda's senior strategist Viraj Patel said. For institutional investors, it's a seller's paradise when you have a buyer that is clearly not reading the fundamental signals. This year, Tesla retail investors remain bullish. In fact, individual investors are scooping up Tesla stock as the shares continue one of their longest winning streaks in history. Tesla shares were the top buy for retail traders in June, according to Vanda Research data. However, said retail investors recently received not-so-great news about Tesla. Tesla deliveries in the third quarter fell below Wall Street predictions, marking a substantial decline compared to the global EV giant's record-setting number in the second quarter. A few days ago, Tesla reported that it produced 430,488 vehicles and delivered 435,059 during the third quarter. Tesla deliveries fell 6% compared to Q2, with the EV company reporting the drop-off was due to planned downtimes for factory upgrades, as discussed on the most recent earnings call. The company delivered 15,985 Model S X vehicles and 419,074 Model 3Y vehicles in Q3. Tesla reiterated Monday its 2023 volume target of around 1.8 million vehicles. Ahead of the release, analyst consensus had deliveries of around 461,000, according to FactSet. However, other Wall Street estimates had a consensus closer to 455,000. Production fell as Tesla temporarily shut down factories and generally slowed output. Some of that reflected manufacturing upgrades for the refreshed Model 3 in China and the upcoming Cybertruck, but it appears Tesla was seeking to pare down swelling inventories. The global EV giant announces full third-quarter earnings and will hold its earnings call by mid-October. Notably, Tesla bulls were already looking past Q3 deliveries, betting on a strong Q4 recovery and the expected Cybertruck launch. We are now set to be entering the next stage of growth for Tesla globally, with the Model 3 refresh front and center in China and the Cybertruck production set to kick off beginning around Halloween. Wedbush analyst Dan Ives, a longtime Tesla bull, wrote on Friday. However, Deutsche Bank analyst Emmanuel Rosner recently outlined a more pessimistic view, dropping the firm's price target on Tesla stock to $285 from $300. Rosner predicted Tesla deliveries of 440,000. Moreover, Rosner sees meaningful downside risk to 2024 consensus estimates due to limited volume growth. Deutsche Bank expects 2024 deliveries to total 2.1 million, below the current consensus of 2.3 million units. Rosner also sees 2024 EPS of $3.90, which would be below 2022 profit levels. Wall Street predicts 2024 earnings of $4.68 per share, according to FactSet. Now, you may be wondering why retail investors are dumping money into Tesla shares. Well, with the stock market increasingly seen as a bet on artificial intelligence in addition to being the leader in electric vehicle space. According to Vanda Research, retail traders have ramped up their bullish bets on the EV maker this year, with the 10-day moving average of retail flows into Tesla far outpacing retail flows into other EV stocks, as well as flows into AI stocks, per Vanda data. Retail purchases of EV stocks other than Tesla make up just 6% of average daily Tesla purchases and make up just 5 to 10% of average daily Tesla purchases compared to the fourth quarter of 2020 and the first quarter of 2021 when Tesla inflows peaked. But it's not just a bet that Tesla will be the top dog in the EV fight that's driving more investment, Vanda says. The rally in Tesla shares in 2023 is partly attributable to the excitement for artificial intelligence technology, which has taken large-cap tech stocks higher through 2023. This hardly looks like a resurgence of the EV theme from a retail perspective, the research group said in a note on Thursday. Hence, we can confidently say that retail investors perceive Tesla as an AI proxy more than an EV story, at least for now. Institutional investors have also ramped up their Tesla bets, the note added, a sign that the appetite for Tesla stock has room to grow. Though Tesla CEO Elon Musk has long been vocal about the dangers of AI, he's hinted for months that Tesla could incorporate artificial intelligence into its own business amid the hype for ChatGPT. In April, he quietly set up a new AI startup in Nevada called X.AI, which he suggested could roll out a ChatGPT competitor called TruthGPT. Despite its strong performance in 2023, Tesla is still battling economic headwinds as high inflation and elevated interest rates continue to weigh on the broader market. And though the company has slashed prices on its car models repeatedly in the past year to fight off competitors, those discounts are eating into its profit margins, an issue that has caused concern among Wall Street analysts and investors. Overall, Tesla has been a favorite of retail stock investors betting on the clean energy transition and admirers of the company's often controversial CEO, Elon Musk. With a market capitalization of around $782.74 billion, Tesla is one of the world's largest companies by value. The company launched its shares on the stock market in June 2010 at $17 a share. A decade later, the stock was trading around $1,000, a gain of more than 5,700%. As of March of this year, retail investors accounted for the largest block of shares at around $1.36 billion, or 43.16% according to Wall Street Zen. Institutional investors accounted for 42.84% of stock ownership, totaling 1.35 billion shares, down from a 43.01% share last year. Company executives held 14% of the stock, or 442.8 million shares. Simply put, retail investors have great hopes for Tesla and its stock. Subscribe for more.